Hey there, my fellow traders and investors. I'm Sasha Evdokov, and welcome to TRADERSFLY TV, where we discuss the latest stock trading ideas, strategies, and investing concepts. Now, in today's lineup, it's October 4th, 2013, we're going to be discussing Buffalo Wild Wings, Google, Tesla, Apple, and Facebook. So, taking a look at the charts, let's move forward with Buffalo Wild Wings. So from here, what I've seen was that once this resistance line over here broke, Buffalo Wild Wings started on a nice soar. It had a nice couple-day run. It was pushing against this resistance line over here at the 111 mark, 112 mark. When it broke through that, all due to the higher volume, it continued its run for a couple days. Now, it did have a pullback the other day, yesterday, previously, but it wasn't anything substantial. Now, right now, it's holding at this 115 mark. At least it's trying to. The market has been fairly negative, but it's holding this mark and this level. Now, if you got in it over here at the 112.80 level, then you should be raising your stop and you should have took some profits on the way up for sure. But right now, this stock looks pretty good and pretty healthy according to the volume. But if it does hit the 115, 114 mark, then you should probably be out if you caught the run over here a few days ago at that 112 level. Now, looking at Google, this stock has been on a decline for quite some time now over the last couple weeks. Now, it hit this past 900, 905, 907 level, and you can see that it had multiple tops over here. So we had one here, we had a second one over here, and we had this third one over here. Now, when it hit this third one, this was a perfect opportunity to go short. Now, you notice that the volume was pushing to the upside right here, but it couldn't do it. It couldn't take it out. So instead, what you would do is you would short it. And right here, this is where the trend was going. Now, coming up a couple days ago, actually yesterday, we had this bearish engulfing pattern right here. This red tick right here actually engulfed the previous tick. So again, this stock is looking for further downside, but this is what it appears. Now again, if you shorted it earlier over here on 9/19/2013, you should definitely be pulling some profits as the move has been over a 30-point gain. If you had 100 shares, 30 points, $3,000. Not too bad for a week's worth of work. Taking a look at Tesla. Tesla had some negative news a day or so ago with the car explosion, battery explosion. In either case, that's not as important. What is important is the levels and the action that it's going through. Now, if you look at the volume, what's been going on and what's happening was it had quite a few negative days of volume. It had 2 solid days of negativity, also due to the market itself and breaking some key levels. So over here, Tesla was going back to retest this 170 level, and right here was the confluence region where its meeting point was hitting, and it now marked and moved its way back up. Now, if you got in this at this 170 level, stick to your stops and start raising them, because right here, this is the line of support. So you want to watch this stock very carefully because it's critical to see what it does over the next day or two. Now, if it breaks this low of right here, we have 168 exactly, then chances are it'll go on downside if it does it on higher volume. Now, if it does it on lower volume, you could still see more downside because action is the action. But on the flip side is if the stock keeps pushing higher and it starts to increase volume and it breaks past this high, then again, the stock should head to the 200s. But we'll see what happens with the action over the next couple days. It could be stuck in this trading range right here between the 195 level and the 170, 168 level, because that's what it's been doing, is it's stair-stepping its way up. And the same thing can happen over the next week or two. So keep an eye out on the action, keep an eye out on this lows, Hopefully you're not getting in it just now. The stock has been climbing for quite some time. If you got in it, let's say at the 158 level, you should definitely be taking some profits over here. Now again, if you got in it, let's say just now at 170 because it hit that 168 level, then you want to be careful. You want to definitely stick to your stop at the 170 or raise it to 171, 174 level. Take some profits because now it's hitting 180. So definitely be careful on this one just because of the two volume spikes right here that's going on and what's happening. Taking a look at Apple. Apple has been trending lower since it's hitting these highs, and I've been bearish on the stock for a little bit due to the gaps that have been happening over here. These gaps need to kind of fill. It tried to push towards the 500 level right here on 9/23/2013, but it didn't even make it to 500 or push on it. So the stock has been actually going on this decline level. Let's remove this trend line and let's take a look at it here. You can see that it's kind of been declining or creating a wedge pattern here as well, but in either case the trend is it's making lower highs, and that's what's going on with this one. And right now the action isn't pushing up, whereas all the other stocks today, some of the leaders have been pushing forward and pushing higher. This one has not pushed higher today, so it's acting a little bit weak. So we'll see what happens. Chances are I'm looking for a little bit more lower downside on this one just because of the gaps here. These were the exhaustion gaps, and I presume that it'll head lower. Now it can do anything it wants, but 500 right now is key for this stock, and also that 515 level. And finally, last one that I want to take a look at is Facebook. I got in this trade for, earlier over here at the $40 level, and it's been doing, again, a stair-step climbing patterns, which is one of my favorite patterns to see because it allows you to add to positions as the stock moves up. Now, when the stock broke lower over here, let's just take a look at the 30-minute, and you'll know that I like the 30-minute more so than the hourly because there's 6.5 trading hours in a day. So if you break it down in hourly, then the ticks don't come out as evenly. But in either case, right here the stock was looking to go lower, and I thought it may fill this gap over here at between the 48.50 level and the 47.60 level, but it didn't. It didn't do that yet. So right now it's holding that $50 level. I was looking and watching that $50 level. That $50 level right here is quite critical. So it has its own support network right there at 50, and watch it and use it as your stop. And if it goes lower, be careful because of this gap, and that's what you want to watch for. So if you're trading stocks to swing momentum and you're watching them for the intraday stuff, these are the things you want to watch. And this is how you do it. You watch the volume, you watch the price, and you watch the action and the behavior. And then you see where the stocks tell you how they're acting, how they're reacting. Remember, you don't have to follow 2,000 stocks or 3,000 stocks. You only need a few good stocks in a year to make your year. So that's all you need. Anyways, go ahead, leave me a comment what you think of certain stocks, or if you have some questions about some common stocks on the daily recap, then just go ahead and post them below. And remember, all the great stuff is at TRADERSFLY.com, where I discuss some of the latest trading and investment strategies. And if you like this video, feel free, share it with your friends so they can benefit and spread the wealth. Thanks again, and remember to do what you love, contribute to others, and most importantly, live life abundantly. See you next time. Thanks again.